Hi there, and welcome to my channel Simply Stocks. And today I'm going to talk about AKI energy or EKI energy or EKI energy. Small that can be big, a very interesting company that I'll talk about. This has been consolidating for many months, so let's discuss in detail about the company. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about EKI Energy, his small request that kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk or a number of stocks you're holding, a portfolio you're holding, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can get the WhatsApp membership as well. Now about the company. Established in 2008, EKI Energy is engaged in the business of climate change and sustainability advisory and carbon offsetting, along with business excellence services. So they are in a very niche space. In fact, I think one or two companies only listed in India that works primarily into this space, which is a huge sunrise sector, which is a sector I think for the next decade or 15 years that things should go along well for this. One of a kind firm with marquee clients. It is spread across the globe and works in Australia, Europe, US, and I'll give you the geographical split later on. The clients include Airport Authority of India, United Nations, Framework Convention on Climate Change. We have the World Bank, NTPC, etc. The market cap of the company was close to 3,000 crores just recently. It has just gone up a bit, so it's close to 4,000 crores at the moment. So these are the numbers, although the detailed numbers are analysis of Q1 numbers, which were very good, but Q2 numbers just came out recently. So their sales were flat at around, not flat, but just a little bit up of with about 12-13% jump. Profit was up by around 16%. It's a completely debt-free company, not a debt-free, but a debt-free company. A strong promoter and decent institutional holding. ROE of 176%. That is the kind of ROE it possesses. Margins of 28% is pretty good. If you look at the results at a glance, now this is Q1 numbers FY23. So what I just gave you here, these are Q2 numbers, but based on Q1 numbers, which are pretty strong, these are the minute details of the Q1 numbers. So margins in Q1 were up 300 basis points year on year, but were down 300 basis points quarter on quarter. And the margins have remained stable if we look at 2019. So that's a good thing that post the pandemic, the numbers are coming back into shape and the margins have come back to the same level as in 2019. Sales have grown astronomically over the last 3 years. It has grown tremendously from around very less in you can say just about double digit to around 1800 crore sales for the year, and for the quarter also sales have done exceedingly well. I'll give you the sales details year on year in the next few slides. From virtually nothing, reserves have gone to around 450 crores. They were having only 0 or 1 or 2 crores of reserves. In the last 4 or 5 years, it has gone to around 450 crores. And demand will remain consistent going forward as climate change controlled remains a focus of the globe. So this company should end up doing exceedingly well over a 8, 10, 15-year period. High promoter holding at 74% also augurs well for the company. So if you look at the revenue picture, this is exactly what I was talking about. In FY19, they had a revenue of around 20 crores, whereas in FY22, they had a revenue of 1800 crores. That's the kind of change it has had. Astronomical growth, not 9x, but 90x growth in sales, as we have seen. In terms of profits also, from around 1 or 2 crores, 1 crore became 5 crores. During the pandemic also it grew from 5 to 19 crores. So year on year growth were growing at 4-5x, but from 1920 crores in FY22, the profits jumped to around 383 crores, which is phenomenal. And in terms of margins as well, from around 5% in 2019, the margins have swelled up to 28-29%. I think they're going to come up with 28-29% this year as well, which is very consistent and very strong margins in terms of what the company is doing. If you look at the geographic split of their business, so basically their business is you can say it is across the globe: India, Europe, US, Australia, and other countries. So other countries apart from Australia, US, Europe, and India contributes half of their business, which is pretty good. That means their spread between countries in terms of sales or revenue is not that big. So the other countries, around 15-20 of them, contributes 52%. They have decent sales coming from India, and sorry, Europe contributes 52%. I'm sorry for that. Europe contributes 52% of their sales, and this is primarily where the numbers have remained subdued for this quarter. We have seen what problems the companies are facing who have business in Europe. We have seen many IT companies not doing that well. So once this gets rectified, I'm hoping by April of next year or so, I think FY24 numbers should be very strong. So Europe contributes 52%. Others are 12%. So others has 12%. India business is only 2%. So this is primarily business that is centered around global revenue, and we have revenue coming from Australia, which is around 27%. So it's pretty decent, and US contributes around 7%. So this is a more a global centric company. But why I'm bringing this right now is that we are going through a real turmoil, economic turmoil globally, especially in Europe. This is the time to buy big such companies like EKI, because over a period of time, once things normalize, the stock could zoom. And so that's why, again, the time frame here is more than 3 years, at least 4 to 5 years, preferably 8 to 10 years if you can hold on. This sector and these companies could do a lot, as we are seeing what is happening with electric vehicles, what is happening with carbon emission norms, etc. for companies. I think this company could do extremely well once global scenario picks up and becomes better. Some of the important pointers for the company: majority sales come from Europe, as I explained, and that's the major reason why the stock has been under pressure this year and has not done well. But I think things should look good from middle of next year or so. Stock was up 80x in 2 years at peak and has corrected around 60% from there. So what has happened is it went up sharply to around something like 6,000 or something like that, and had corrected 6-7 thousand or so, and has corrected from there. Now it has picked up pace from around bottom of 3,000 that it made recently. So the stock is reasonably priced. It's not very expensive at the moment. A strong ROE of around 150%, which is unheard of, but this company is producing such strong, you can say, profitability and ROEs. Profits have also exponentially expanded since 2019, as I have explained. So now after the fall, as I explained that the fall has been around, even now with the move that we have seen over the last 1 week, the fall in the stock has been around 50% or so. So it is very reasonably priced at the moment, and one can start accumulating at these valuations. So as I explained, the valuations at these levels look extremely interesting, and the stock has fallen 50% from a top, and it is in a very niche space and sunrise sector, and the only listed firm of its kind. I mean, there are companies that are into green energy and many other things, but this is primarily into carbon emission, you can say, restriction and many other things that they work on, and they have very huge marquee clients. So I'm surprised that the stock has been consolidating for so long. Yes, the valuations are stretched even after the fall, but there has been a decent fall from the top. So if one can take a little bit of risk, he can have, you can say, 2-3% exposure into such a stock. In terms of valuations, if we look at expected FY23 EPS, I believe that it could be close to 130 rupees. And at 4,000, it is trading at around 13 times FY23 earnings, which is not very expensive at all. And FY24, I feel that the numbers could be much better because Europe should recover from these difficult situations. So FY24 EPS could be somewhere close to around 190 rupees, and even if the stock you can say trades at something like 20 times, we are looking at 4,000 as a target by 2024. And I believe that the stock should be trading much higher than that. I think the stock should be trading at 30 to 40 times. So we are looking at 6,000 and not 4,000, but 6,000 over a 2-3 year period. But over a 5 year period, the stock could be exponentially higher than where it is. I think numbers could remain stable and the valuations could expand even further. So this is primarily investment from a 4-5 year minimum period for those who can take a little bit of risk and buy 2-3% of the holding or a little bit more in their portfolio. This can create that alpha. Now we are looking at you can say technicals. So it looks weak on charts, may take time to stabilize. There's strong support around the you can say 1500 1200 level, and has taken out most of the support in those regions. So on the short term basis, it is an avoid because the stock has not done that well. 1400 or so is where the stock is. The up move is expected above 1500 levels, but I see the stock go up sharply from there on in once things in Europe stabilizes. So over 2 year period, I think 4.5 5,000 is a very big possibility. So in my opinion, from a 3 year point of view, it's a buy at these levels in a staggered manner. On bad days in the market, one can definitely accumulate the stock. Short term, as charts look weak, so you cannot probably trade on a short term basis. It will do well once Europe recovers and does well in that front. So it's a buy if you can hold more than 3 to 5 years. As I explained, this is a very good long term story that is you can say turning out. And allocate less than 3%, as I said, not a lot. Don't allocate 7-8% into such a stock. We don't know where the tide would turn when in terms of this carbon emission norms, etc. But if the things go well, this could be really good. So if you are a huge risk taker and really want to buy, probably 3-4% is the maximum limit you can go to. So this was my video on EKI Energy. Please like and subscribe my channel and hit the bell icon so you get my video straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.